Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrow Die. As always, these videos are for educational and entertainment purposes only. They are not tax or financial advice. Bitcoin Borrow Die is powered by BitStack, a software platform where you can build your wealth in Bitcoin terms. Visit us at trybitstack.com. So getting into today's topic, my favorite stock, MSTR, is the most shorted stock in the entire market. And we're going to discuss why this is, what's happening, what is a short trade, and how this can impact Bitcoin and the Bitcoin Borrow Die strategy. So the main headline is Strategy is the #1 most shorted large cap stock in the market. About 14% of their float, the shares that trade, are in a short position. It's about 38 million shares, about $6 billion, and they currently hold over 700,000 BTC on their balance sheet. MSTR leads all stocks with a $25 billion or larger market cap, and even Coinbase is only, quote unquote, 11% short. So MSTR is even more shorted than Coinbase. So that brings us to the question, what is a short trade? Why would somebody do it? How does this all work? So at a very high level, you can short a stock or an equity, and you're basically betting on it going lower. You want it to go lower. That's how you make money. And then the opposite is longing a stock. So you buy it and you want it to go higher. So that's the very basic breakdown of what a short is versus what a long is. A short sale is the opposite of what we're doing for Bitcoin Borrow Die. So with Bitcoin Borrow Die, the buy, borrow, die strategy, you're trying to go maximally long. You want to continue to acquire an asset that's appreciating over time. And the entire point of taking out loans against it and rolling that over time is to get income and to have some access to that liquidity and value that you built up. But it's really to never needing to sell. If you never sell, then you're just incredibly long. So that's kind of the Bitcoin Borrow Die strategy. That's his notion of time in the market. A lot of people that think about like investing in the stock market and things like that are long, or like the most basic principle is just to be long something. Buy something, continue to buy it, and watch it grow over time. So that's kind of like the long side. The short side is really the opposite, is where, let's say we want a short strategy. We have a brokerage account. We don't own shares of strategy. We borrow shares from somebody. So that is step one here. The brokerage firm lends us their shares of strategy. So now we have some. We immediately sell them at today's price. Let's just say it's $100 per share to make things easy. So we borrow, and we have to pay fees and things like that to the brokerage firm. We sell, so we're trying to push down the price with our sale, and we think the price is going to come down regardless. So we sell for $100, and then we hope that the stock continues to fall further because we need to repay the brokerage the shares, not the amount. So step one here, if we borrow one share, we owe them a share at the end of this process, regardless of price. And we're paying some fees to be able to do this. Then we sell that one share for $100, if that's the market price. And then we hope that the price comes down to, like, let's say $80. Then we take our $100, we buy back the share at $80, and then we return the share to the lender, to the brokerage, and we keep that $20 per share minus fees. So that's when a short trade works well. This is why somebody would want to do that. You think a stock is going to go lower. You don't like the stock, you don't like the business, what have you, right? Like you just, it's a way to express like a negative position on something. But on the flip side, again, when we borrow one share, we sell it for $100. If instead of the price going down, the price goes up, we still have to cover here. So if the price goes up from $100 to $120, we still owe that one share. So even though we sold it for $100, we have to buy it back for $120, which is a loss for us, minus fees and interest. And then this further pushes the price of the stock up because we're buying. And depending on how big the position is, how many of them are, this can cause what is called a short squeeze, where the shorts have to cover at some point, and if the stock continues to go up, they have to cover at a higher price, which is a buying action, and it kind of is a wheel circle that sort of pushes it up. So again, so why would somebody want to short a stock or Bitcoin or an equity? It's a bearish bet. They think it's overvalued. They think the market's headed for trouble. There's a lot of reasons why somebody would want to take a negative or bearish position. You can also hedge. So basically you want to be long Bitcoin, but you neutralize strategy-specific risk. This is a little bit more fancy, but hedge funds and other financial players definitely do this. And then kind of this idea of a arbitrage position where you're trying to capture the spread between MSTR's price and Bitcoin's net asset value. So when we look at this, I mean, the headlines read, strategy is the most shorted stock in the market. Without any context or any detail, that sounds negative. But there could be a bunch of different reasons for doing this. Again, kind of this basis trade that we were just talking about. If you buy Bitcoin ETFs like BlackRock's IBIT, short strategy simultaneously, and then you capture this spread here. And we've been seeing Jane Street do this in the recent 13F filings. They hold many millions of IBIT shares in the long positions, and then they short MSTR. So for them, it's market neutral, and they're really just trying to capture this arbitrage, this spread. But they are definitely shorting strategy, so that, again, it is still the most shorted stock in the market, and it kind of pushes down strategy's price. And this isn't just like Wall Street fleeing Bitcoin or a purely negative or bearish bet. It's building more, financial complex infrastructure around Bitcoin, and it's kind of institutional adoption in disguise, in the sense that it's just, there's more plays, there's more things that they can do as Bitcoin becomes more financialized. And what does this mean for us? What does this mean for Bitcoin borrow die in the future? It really kind of sets up for this squeeze, which I was talking about, where if there's a lot of shorts, if there's not, if there's low days to cover, where basically that loop we looked at prior, if they have to repay the shares in a short amount of time, Bitcoin can be going up in price. And then as they have to close out their shorts, they further push up the price. I mean, recently, strategy surged about 8% in one session, and Bitcoin jumped about 6%. So again, a few days or a few weeks of sustained upward pressure really puts a lot of pressure on shorts, because they're going to have to cover over time. And as more shorts, again, like if you shorted at $100 and then strategies at $120 and then at $150, people will start to close their shorts sooner, because if they think it's going to keep going up, you don't want the price to go up if you're shorting. But then to do so like that, you have to buy, you have to return the shares at some point. So that further kind of pushes it up. That's called a short squeeze. And then again, this is kind of validation, not rejection. It's just more sophisticated funds, more sophisticated ways to extract yield and premium. And it's really a response to this new commodity of Bitcoin coming to the market, and also strategy and what they're doing as an equity. And then for us, for Bitcoin Borrow Die, the edge is very simple, very safe. Again, trying to buy DCA, lump sum, acquire Bitcoin, and we're longing Bitcoin and strategy. We want to hold on for the ride and then borrow against the asset as we need to in the future with very conservative LTVs. I would reduce this to like 10%, 20%. 5%, 10%. The lower the LTV, the better. You want to buy, get a large position, and borrow very conservatively so that you don't have to face a margin call, liquidation, or anything like that. And this allows you to be extremely long. And then, of course, when we pass on, our inheritors can take our assets at a stepped up cost basis. So for the people who are long Bitcoin and strategy, it's just more, par for the course. Continue to stack sats, stay humble, and the market will take care of itself. And then one other thing is just if you're looking for Bitcoin exposure with low volatility, but you want that monthly income, monthly cash flow, we've talked about this in a prior video, but Stretch and SEDA are really great options for this, where you can get paid 11%, 11.5% per year paid monthly. And it just helps you sit at par, generate that yield and that income with basically doing nothing, no option for margin call. You're just getting that cash in to either help pay for lifestyle, to help fund loans, to do whatever you need to do. But again, we want some type of income bucket in our portfolio, and Stretch and SEDA are really great for that. So this is just kind of a summary of our favorite stock, how it's being shorted, why it's the most shorted stock in the market, and what a short trade is, and why people would do it. Follow me on X, on YouTube, leave a comment, like this video, and I will see you next week.